Welcome to the WTR Healthcare Happenings podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special Flashcast podcast episode, I'm being joined by my healthcare equity research colleague, Robert Sassoon, to discuss how obstructive sleep apnea, or OSA, market is evolving. You can read more on this topic in Robert's recently published report on OSA, which can be accessed via www.watertowerresearch.com. Good morning, Robert.
Morning to you, Tim. Good to be here with you.
Robert, the severity of OSA seems to be underappreciated in the masses. Why do you think this continues to be the case?
Yeah, I think the underappreciation of OSA is quite striking. The scale is staggering, and yet largely invisible. It's known as the silent killer. Anyway, an estimated 1 billion people are affected by OSA globally, including 80 million adults and 10 million children in the US alone. But for all that, 80% remain undiagnosed and 85% inadequately treated. So this is not a niche condition. It rivals diabetes in prevalence, yet it operates almost entirely below the public health radar. The comorbidity burden is vastly underestimated too. Since OSA was first documented in the medical journals in the 1960s, researchers have identified more than 40 associated conditions: heart failure, stroke, atrial fibrillation, type 2 diabetes, depression, anxiety, COPD, even neurodegenerative diseases like Alzheimer's and Parkinson's. So I would say it's not really a sleep nuisance. It's not merely a sleep nuisance. It is a systemic disease with life-shortening consequences. Yet most patients and many clinicians still frame it as a loud snoring. So the economic cost is quite enormous as well. The US burden estimates that they're around north of $200 billion annually, led mostly by lost productivity. In dollar terms, that's estimated to account for nearly half of that burden. Then you have the comorbidity costs, motor vehicle accidents, which is a major cause, a reason of function of OSA when you're sleepy, and workplace injuries. Because these costs are distributed across healthcare systems, employers, and insurers rather than concentrated in a single budget line, no single stakeholder feels really sufficient urgency to act. So, why is it so underappreciated? Well, I think there are a few compounding factors that stand out, in my view. First, the primary symptom, poor sleep, is widely normalized in modern society. Second, the diagnostic pathway historically required an overnight sleep lab study, creating a significant access and compliance barrier. And third, CPAP, the dominant treatment, carries a stigma and adherence challenges that discourage patients from actually seeking diagnosis in the first place. So if the treatment feels burdensome, patients have less incentive to discover that they need it. So that leaves a huge gap between the true disease burden and the current treatment penetration. And it's not really a market failure that's waiting to be corrected slowly. It is a structural opportunity, in my view, for whoever can solve the diagnosis to treatment conversion problem at scale. So it has been estimated that that opportunity in the US alone is worth in excess of $10 billion.
Yeah, I would agree with you. The financial and the health issues tied to OSA are absolutely staggering. Can CPAP maintain its dominance, in your opinion, or is the market at a structural inflection point? And how do such emerging alternative therapies, such as neurostimulation, oral appliances, and pharmacotherapy, specifically address that 50% plus abandonment rate that's historically been tied to CPAP usage or declining usage after someone tries and realizes it's an awful approach?
Yeah, so Tim, it's true that CPAP remains a dominant therapeutic pathway for moderate to severe OSA, but the cracks are appearing, and you mentioned alternative treatment modalities like neurostimulation, oral appliances, and pharmacotherapy. So let's go back. CPAP's dominance has been sustained more by a lack of viable alternatives up to this point than by patient satisfaction or adherence. And I'll give you a statistic here. Approximately 2 million CPAP prescriptions are written annually in the US. Yet there's a 35 to 50% abandonment rate of the therapy within the first year. So that dynamic is now changing as there are three alternative treatment modalities that you've mentioned that have reached or are approaching commercial scale. So let's go with start with neurostimulation. That directly addresses the core compliance barrier for an estimated 500,000 US patients who are genuinely CPAP intolerant. Now, Inspire Medical has led this category, enrolling roughly 125,000 patients and is generating almost $1 billion in revenue after sustaining, a CAGR of more than 50% over the past 5 years in terms of revenue. However, the segment is no longer single vendor. Nyxoah and LivaNova have recently entered the market with FDA approvals for their Genio and Aura 6000 systems, respectively, introducing credible competition. If you go to pharmacotherapy, that's also entered the OSA landscape. Eli Lilly's GP1 Zepbound, approved by the FDA just over a year ago for moderate to severe OSA, represents the first approved drug-based treatment pathway. Now, that's an intuitive development given obesity's central function of connection with OSA, though it's not the only reason for OSA. Looking ahead, attention is shifting towards Apnea AD109 as a potential non-GLP-1 alternative. So for many patients, the appeal is obvious. Popping a daily pill rather than lifelong nightly device adherence might be a preferable way to go. Now, traditional oral appliances have historically posed little threat to CPAPs, given clinical efficacy largely limited those to mild to moderate disease circumstances. But Vivos Therapeutics has really materially changed that equation. With FDA clearances covering moderate to severe OSA in both adults and children, and a treatment designed to correct airway anatomy rather than manage symptoms, Vivos challenges CPAP at its core, and also the alternative solutions that we mentioned, because it is a finite, approximately 12-month treatment course offering durable airway repositioning. Represents a fundamentally different and potentially compelling value proposition versus chronic device or drug-based therapies, particularly for newly diagnosed patients before CPAP initiation.
Got it. I am curious, Robert, are GLP-1 drugs a true or genuine tailwind for device makers, or is this just a convenient narrative currently?
That's an interesting question. The diagnosis cap is the most compelling supporting argument, with 80% of OSA patients currently undiagnosed. Any intervention that drives patients towards clinical attention, whether a GLP-1 subscription, a wearable flag, or a primary care conversation about weight, expands the pool of people who receive a formal OSA diagnosis. So if Zepbound brings 10 million previously, just for example, invisible patients into the healthcare system, and even a fraction of them requires a device therapy alongside or after drug treatment, the net effect on device volume could be meaningfully positive. So the flip side of the argument is that why not take the pill without the CPAP? So ResMed has argued that patients with an OSA diagnosis and prescribed GLP-1 drug are more likely to initiate PAP therapy. So all that said, it has been estimated that only 1/3 of people diagnosed with OSA are obese, which means that 2/3 are not being prescribed a GLP-1. So, that's the jury's out on that one.
Got it. And then just wrapping things up, Robert, and I have to say I'm very excited to read your report later. Why is the market punishing innovation? What explains the valuation divergence between CPAP incumbents and disruptive challengers?
Yeah, so ResMed is the major CPAP player, along with Fisher and Paykel, which is a New Zealand-based company. So ResMaps has a premium valuation, 7.2 times revenue alongside that's 26, forward-looking revenue, 2026, which is based on consensus earnings. Now, they had an 8% share price gain over the past year, and that reflects a consumer-driven, fully reimbursed, cash-generative model that public markets reward in a higher rate environment. By contrast, emerging disruptors in neurostimulation, such as Nyxoah, and in oral appliances, most notably Vivos, still carry negative EBITDA profiles. They're in the beginning of their sort of transition in the product cycle. They're also the procedure dependent unit economics. They're still evolving reimbursement pathways, widening the confidence. That widens the confidence interval around future cash flows and compressing valuation multiples. So Vivos in particular appears disproportionately penalized. It has a forward price to sales value of less than one going forward. And that's despite FDA clearances for moderate to severe OSA, including pediatric indications, and a differentiated thesis centered on finite anatomical correction rather than chronic symptom management. The market has favored near-term execution risk over longer-term disruption potential. So as a result, Vivos represents really a high conviction risk-reward opportunity. If it can sustain growth and establish a credible path to positive cash flow enabled by its strategic shift from a dealer-based dental model to a vertically integrated patient-centric sleep and airway medicine center platform, and that valuation could narrow meaningfully.
Great. Well, thanks again, Robert, for joining me today. And again, I'm excited to read the report. I know a bit on this topic, so I can't wait to kind of delve into the deeper report at www.watertowerresearch.com, and have a great day.
Thank you too. Thanks.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Healthcare Happenings podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.